Hello everyone, welcome to the Ichimoku.co chart of the day. Aussie dollar, US dollar. And here in recent times we've seen very strong price appreciation in the Aussie dollar from around this 75.50 level down around 73.50 actually, all the way up to get very close to the 80 cent level. Very strong and significant series of higher peaks and higher troughs over the last couple of months. Importantly, the market maintaining the close for the majority of those couple of months above the Kijun-sen indicator and mostly above the Tenkan-sen indicator, with just a few incursions down below and very mild breakouts to the downside below the Tenkan-sen with a lack of follow-through. At the moment we have seen some indecision enter the market. The second last candle on the chart is the one we're analysing. That final candle is one that is just starting to complete, and it is a new candle. It hasn't finished yet, so we are seeing some selling coming into this market after some news with some CPI figures and whatever. But for today, this second last candle has seen indecision once again in the market, following a black body candle 2 days ago with a large shadow on the bottom. The buyers losing control, and that followed another indecisive candle getting up very close to that 80 cent level. After that black body candle we had a very small white body with a large shadow on the top, and today a small body candle again. So net momentum over the last couple of days has been fairly weak, as the market has been attempting to trade to higher levels, and the shadows on the top highlight the buyers losing commitment, and that we haven't seen those type of candles with larger shadows on top all through this extended run from down around this 76 cent level. It did suggest that the buyers have really spent a lot of their energy in this force, and it's time for them to now relax and perhaps give back some profits. Losing commitment up above this 79.50 level continuously now for the last 4 consecutive days does suggest that we are starting to see them just lack the conviction to get up to high levels. Now, that is understandable because this market was looking very overextended at these levels. If we look at the depth of this price activity away from the cloud, it's extreme. And some sort of a retracement for this market is going to be quite healthy. Even the depth of price action away from the Kijun-sen is looking extreme still, and also away from the Tenkan-sen. And just look at the angle of that Tenkan-sen. It's very steep and reflects that very, very solid upside momentum that really is unsustainable. And we get too far away from these Ichimoku indicators. The market needs to revert back towards them to find some equilibrium. The Ichimoku indicators represent equilibrium in their various time frames. Now, if we do see the market extend back towards a retracement of this first time frame uptrend, this significant uptrend from down below this 76 level, we will be looking initially for support to come in at the Tenkan-sen indicator, currently trading at 78.57, and then if that area is breached, looking for support at the Kijun-sen at 77.62. Now, even if this market does get back to the Kijun-sen in the short-term time frame over the next probably 3-4 days, the market will still look extreme in depth away from the cloud here. But as we move further past that, the cloud then becomes, it starts to move higher at quite a strong rate, and it will weaken the urgency for the market to retrace. So if we don't see a strong retracement over the next week or so, we're not likely to see any significant retracement then down through the Kijun-sen. So a lot of the work by the sellers is going to have to be done over the next week or so, and that will include a breach through that Tenkan-sen indicator. Now, importantly, in this current candle it is forming, we are seeing selling here off the back of an indecisive candle. And it does suggest that there is very strong potential for a change of trend. Now, technically, we have an uptrend in place with that candle prior to today forming a higher high and higher low after a change of trend to the downside. Today's candle, no change of trend. It's an outside day in bar chart terms. We have the market just taking out the previous low, but also the buyers taking out the previous high, so quite a bit of indecision. But it has implications for the uptrend, and does suggest good potential for a change of trend. We are already seeing the start of that in this new candle. Now, depending on where this final candle does form, there is potential for the market to form a pennant type pattern. And as always, for any patterns, we always need a trend leading into the pattern, and here we have that very dynamic trending activity leading into the pattern. Now, pennants tend to form over a short range and over a short period of time, and they do tend to be continuation patterns, and there's just a brief pause in the trend. So here, if we do see this market today form a low along this upper barrier, and there's no guarantee that we will. We could end up extending all the way through there, so just monitoring very carefully how the market behaves for today. If we do find that that area holds and then we break out to the upside with a close above here and a strong bullish close with the buyers resuming into this market, we certainly could see this trend resume to the upside. So very important trading activity coming for this market over the next day or so. Now, just looking at the Fibonacci extension tool, and we're examining this first time frame uptrend that the market is currently in. It's disregarding that final candle, it hasn't completed trading, and we're examining the relationship of the new first time frame uptrend to that very strong immediate previous first time frame uptrend. And here over the last couple of days we saw the market interacting with the 23.6% level. The loss of commitment by the buyers above there does suggest, or around there does suggest, that there is a very good chance of a change of trend, and we are currently seeing perhaps the start of that with the current candle that is forming a lower high and a lower low. So looking as though we may see confirmation of that change of trend at the close of the next day's trading. Now, just using the pitchfork technique, and here we're examining this significant second time frame uptrend that the market's in. Very dynamic activity, very solid breakout above that upper median line, and the market retraced back towards the median line, and then we saw follow through, retracing back towards there, and then holding a support on a couple of occasions, testing through that 300% warning level. That area now holding a support, and it's held a support in recent days and will be a crucial level here. At the moment, even in this new candle, we have seen the market test down through there, and we are seeing some upside rejection, so that's really crucial. I suggest that if we do see this current candle close down below there, and if we do see a bearish close, we certainly could see a more significant retracement to the downside. And if we do see a retracement down through the Tenkan-sen and down towards the Kijun-sen, it could bring that previous 200% level into play. And that's a level that we should be watching for support. And over the next couple of days, it's most likely going to coincide with the Kijun-sen indicator. So very solid support projected around this 77.62 level. Now, next over to the minor pitchfork, and here we're examining these swings on a first term trend basis, just each swing. So here, previous upswing, downswing, and then that upswing that we are looking at potential completion for the next day. And importantly, the median line has been holding as resistance over the last couple of days, and the rejection from there, but also the bottom parallel medium line has been holding a support, and even in this new candle we are seeing support. So once again, suggesting if we do see a close down below there, we could see a test down to lower levels. And then that could bring into play some of these warning lines, the parallel warning lines. And the first one to be looking for, the important one here, is this 50%. And it coincides with the Tenkan-sen indicator at the moment. So this area around the Tenkan-sen 78.57 is likely to be very, very solid support. A bearish breakout down below there would be significant, and we then could see the market testing down to that 100% warning line. For the next day's trading, or for today's trading, I don't think we'll probably get there for today. It is a bit extreme at 77.89. For the next day, it's down around the 78-cent level. Now, just looking at our levels of support and resistance here too. The important one, other than the 78.31 level and the 77.89 level between the Tenkan-sen and the Kijun-sen, is this highlighted zone of previous resistance here. As the market was testing too high levels in recent times, we saw continual price rejection from that area. Very significant area of resistance, 77.58 roughly, and it is an area that now coincides roughly with the Kijun-sen. And if we do see the market retrace down to there, it is likely to be a very significant area of support, and the support will extend anywhere down through to the bottom of this highlighted zone, down to about the 76.26 level. Now let's just go to the hourly charts with the Aussie dollar, US dollar, and have a look at what's been going on in recent days. And here we see this sideways movement here after that very significant dynamic trending activity, trading above the cloud for quite some time. The cloud holding a support on a few occasions, even the bottom of the cloud, but then we eventually saw a breakout down below the cloud, and the market hovering above and below the cloud in recent days, suggesting a lot of indecision. And that's actually what we've seen on those candles with those small body and the indecisive spinning top type candles. Now today, with some news that's come out, we have seen a breakout down below the cloud, a fairly bearish one, but we are seeing support coming in at the first pivot point support level around that 79 cent level. Also resistance around the Kijun-sen, and very close to the middle of the pivot points around 79.36. The market is now trading down below the Ichimoku cloud. We have had this bearish breakout, but what we want to see now is bearish follow through to confirm a potential for further downside. Now, what we'd like to see would be the market closing in a bearish manner down below that first pivot point support level. If we do see early important bearish activity down through there, we could end up extending down through to the second pivot point level. Support level around the 78.68 level, and then possibly with a breakout to the downside in a bearish manner, we could end up extending down to 77.98. Importantly, if we do see an attempted rally, we do have a very thin cloud for the majority of the next trading day, so or the remainder of this day into the start of the next trading day. So potentially very weak resistance may be offered by the cloud, but we do have that Kijun-sen around that middle pivot point level, so that's an area where we could see the buyers lose some commitment around that area. Bullish breakout above there could easily see us test to the first pivot point resistance level around 79.70. And just looking at the pitchfork technique, and we're using the major one where we're looking at the peaks and troughs in the second term trend, and here we're examining the relationship of this second term time frame downtrend. And here we see on that very strong sell-off, I'll just magnify that a bit, that very strong sell-off in the recent times with that news, that weak news that was coming in with the Aussie economy. The 100% pitchfork line, the bottom pitchfork line coinciding parallel with the median line, it coincides with the first pivot point support level, and it has projected some strength in terms of support by coinciding with that level. So that's an important area, and it doesn't really deviate away from that area. So that's going to be a very significant area, and it does strengthen the idea that if we do see bearish activity down through there, we could test to the next level. The next level coincides with the second pivot point support level, so another area where we could see the market finding some important support. Importantly too, the median line coincides with the middle of the pivot points here, and then the upper median line parallel to that median line coincides with the first pivot point resistance level. So we have the pitchfork technique at the moment lining up with our support and resistance levels with the pivot points. So it doesn't happen all the time, but it does suggest that we have very significant support below and very significant resistance above. So breakouts or test 2, we watch how the market reacts, and at the moment in this current candle we have seen the market, the sellers losing commitment down below these important support levels. But watch how the market reacts around these levels. So losses of commitment and rallies off these levels suggest that they are important levels, and then looking for potentially strong breakouts in either direction. But importantly at the moment, we are below the cloud. We do have some bearishness in this market in all three time frames. And it is suggesting that any potentially strong breakout down below this 79 cent level could see us testing down to the 78.68 level.